Okay, so in today's video, we're going to look at some features pertaining to health insurance policies. And this is just going to be sort of a broad discussion of a few general characteristics or sets of information that would be pertinent to health insurance policies. Um, you can dive into all kinds of details with each of these, but we'll kind of get started and see how far we go. So. One of the things that a health insurance policy is going to address is how it handles pre-existing conditions. Now, under the Affordable Care Act, currently exclusions due to pre-existing conditions are not allowed. So what that means is a health insurance company cannot prevent you from purchasing health insurance due to pre-existing conditions. Now, if you think about that, that actually creates some interesting issues for a typical insurance model. So the typical idea behind the insurance was you are thinking of a potential risk, so a possibility of a financial loss, and you pay some money up front to transfer that risk to somebody else, and then they bear the cost if that possible event occurs. In the case of pre-existing conditions, that's kind of a little bit of an interesting challenge, because if you have a pre-existing condition, it's not a possible future event anymore. It is a current event that's occurring. And therefore, if you're incurring various costs, you're asking to transfer that to the health insurance company. You're basically asking them to take on the full costs. And so by not allowing the health insurance company to deny on the basis of pre-existing conditions, this does create a situation in which that could make things very expensive for an insurance company, where basically people could just not buy a policy and then wait till they got sick and then buy a policy after they're sick because they can't be turned down. Well, that's basically where you have the adverse selection issue. And one of the ways that we've discussed previously that the Affordable Care Act attempted to address that was by creating the open enrollment period, where there's only a certain window of time in which you can buy a health insurance policy. So that's kind of one of the goals of that, is to try to sidestep some of those adverse selection issues. Whether that's entirely successful or not is a whole nother discussion. But that's kind of the goal behind that open enrollment kind of period, is to kind of address what happens with kind of adverse selection, and try to minimize that due to things like the effect of mandating that pre-existing conditions cannot be an exclusion. Also, there's an incontestability clause. And this is basically a clause that protects the insured person. So let's suppose you mess up when you're filling out your health insurance forms, and you incorrectly state that you don't have a family history of something, or you don't have a diagnosis of something. Maybe you forgot, things like that. Well, basically, the health insurance company has a period of time in which they can essentially contest what you have claimed in terms of your health situation. And so they can say, within a certain period of time, well, wait a minute, we think you actually do have a cancer diagnosis, or we think you do have a diagnosis of diabetes or something like that you weren't honest about. Or in your case, you forgot some diagnosis you've had. So the idea is, with the incontestability clause, is the insurance company has a limited window of time to basically go back and say, wait a minute, I'm not sure that what was stated on these forms and applications was correct. If the health insurance company has not basically raised those issues, if there are any, within the limited window of time, then later the health insurance company can't contest the insurance policy on the basis of that. And basically, that's just to kind of protect the insured person. If you forget something, you omit something accidentally, things like that. The insurance company later, when you have a nasty diagnosis, they can't go back and look at your application paperwork and say, oh, they forgot about that. We're going to cancel the policy. So they can't do that. They can contest things within that limited window, and then after that, it becomes incontestable. Also, oftentimes there is a grace period to pay premium. So if you miss the payment of your premium, oftentimes there is a window of time that you can still pay and kind of keep the policy in force and so forth. Oftentimes they'll have a reinstatement reinstatement clause that basically controls under what conditions you can kind of reinstate a policy if you're late with payments and it's lapsed, and how does that work if you make up the payments within a certain period of time, or things like that. And there is basically a and this is sort of the going back to the kind of incontestability kind of a thing. It's kind of that time limit clause, which again limits sort of the time the insurer can look at misstatements you may have made or things like that. So that's kind of the idea. But basically, between the two, incontestability, basically the insurance company after a certain window of time can't contest the fact that you do in fact have an insurance policy, and they can't change that. And then the time limit clause, they can't be looking at misstatements after a certain period of time to involve that with trying to cancel your policy. Also, they're going to have, for health insurance policy features, they're going to have a renewability clause, which specifies under what conditions the policy may be renewed. And so that would be important to review as well. Hopefully this video has been helpful. Thanks for watching, and have a great day.